I want to start on your earnings. People say they've been pretty disappointed 2 years in a row with your earnings, at least from the market perspective. Yeah. How do you view it?
I don't think it's 2 years. I think we had a quarter that was difficult in one particular element, in net interest margin, which is an indication of peaking rates in the UK and the spreads which we make on it. Now, we were not very different from the other UK banks, but we heralded the trend for some of them. And I think there's a broader question which we spoke about at our earnings call, which is an investor on a day and announcement which we will do in early February, which will talk about what our shareholders should expect from us in terms of returns, in terms of the compositions of returns, in terms of how we are running our businesses, and how much we will share with them. And I'm really looking forward to doing that in February.
Talk to us about your strategy review as you head into it. I mean, what will be the areas of focus? Are there particular businesses that you'd like to zoom in on to drive that growth?
Yeah. So, in a way, you have to look at the bank, if you look at it over 15 years, and we've gone through, if you begin in 2015 or so, we had a period after the financial crisis when there was a lot of cleanup happening in Barclays. Legacy regulatory settlements, legacy issues like PPI in the UK, all of that and the need to build up capital led to years of returns of single-digit ROTE, and this was in the 2015 to 19 stage, roughly speaking, single-digit ROTEs and capitalization building up in the bank. So the bank used to have a CET1 of around 10%, now it's 14%. If we actually used the calculations of 5 years ago, that 14 would be more like 16. So we've been spending money investing in that and building it up. We've also been investing in our investment banking business, our markets and trading business. And then there was a period when there was a question, should Barclays be in investment banking? And if it was in investment banking, would it be any good at it? Well, we're the biggest investment bank outside of the top 5 domiciled in the US. So we are Britain's global investment bank. And so we've been successful. In the next phase, I think we've got an investment bank at scale, and we've got to focus on the businesses around it, which are generally higher ROTE, and tell our shareholders more clearly than we have in the past few years how much of the returns are going to accrue to them.
You talk about ROTE, pretty decent at this point in time. Capital generation as well, pretty good. Yet Barclays has been undervalued. How do you reverse it? What's your understanding of why it is undervalued?
I think there are 2 reasons. I think people first want to know of the ROTE that we generate and the capital that therefore accrues, what's coming to them, what's coming to the shareholder. As I said, in the past, there have been other claimants on it. One claimant was historical regulatory settlements. Another claimant has been increased capital requirements. We are coming to what they call the Basel Endgame now, and I think we have a much clearer idea in the UK, in the US, of what those capital requirements are. We've got to run ourselves well so that we don't produce surprises, negative surprises, or positive ones. Neither is really very good. Run ourselves in a predictable manner, in a consistent manner, and deliver predictable and understandable returns to our shareholders.
During your earnings, you talked about wanting to reduce or taking actions to cut structural costs. What do you mean by that?
So the bank, since 2019, with COVID, with everything else, has not really looked at its own efficiency. And our workforce has grown in many areas. And what we are trying to, and at the same time, we grew it for a lot of projects and investments. Many of those projects are coming to an end, and obviously we will look to redeploy staff in other areas, but there will be some areas where we can become more efficient, and that's what we will do.
Such as?
Well, I think it cuts across different activities which we do, and I think if you look at the cost-income ratios of our various divisions, they are slightly higher than the competition, and we should get to a level which is more akin to the competition.
Does cutting structural costs mean a reduction in your workforce, whether it's globally, whether it is in Asia? And I'm just wondering what the impact would be in this part of the world.
So it is a reduction in workforce, generally speaking. In Asia, we, of course, have very booming economies, and we also have a very growing business. So proportionately, it's far less likely to impact this region.
Is there a way of quantifying, first, the numbers, and two, where might the cuts be done? Would it be perhaps your investment banking front office? Is there a sense you can provide?
So there is a way of quantifying, of course, but I'd rather keep that discussion to February. In terms of businesses, it is not so much business specific as trying to look at all of our businesses and get them to a productivity and an efficiency that we think benchmarks well to our competition. And so there will be more or less in different areas and different businesses.
You're optimistic about Asia. Where are the growth markets? Where are the growth areas?
So I think you have to take a very, very, very long view in these things.
And by that, what, 20 years?
At least 20 to 30 years. Barclays started in Singapore 50 years ago, as you mentioned. We started with 9 people and a £90,000 annual budget. Okay, now the numbers are, of course, much, much larger. But it was the vision of those people then to invest with a dollar bond trading desk and clearing. In the same way, we have investments in India where we have a full-fledged capability in investment in corporate banking and wealth. We've got, of course, a large trading center here in Singapore. We've got it in Hong Kong and in Tokyo. I think Asia, generally speaking, is growing at a much faster rate than the West. The US is going through a bit of a growth spurt right now, but certainly more than Europe and the UK are. Banking should generally grow at the rate of GDP over the long period. So that means for us, it's important to be in Asia where there is growth. We are a wholesale bank here largely. We do some private banking, which means it is for us the ability to connect with corporate clients and institutions in Asia and to help them in turn connect with the capital markets in London and New York.
Asia, of course, diverse. We talk about Asia growing, but when you take a look at a key market like China, it's actually slowing down from what it is used to, 8% now, possibly 4% or even less. How are you looking at China and the potential, especially for your wealth management business?
So we are largely an institutional business. And I think in wealth, it would be a little ambitious for us to try to think of China right now. We should do better in the UK. But in China itself, look, there are many countries in the world which would take 4%. And China has accumulated a lot of capital, a lot of skill. And, yes, there are excesses in parts of the Chinese economy in real estate. But their technological prowess is really strong. The entire clean energy economy cannot exist without Chinese components and Chinese raw materials. And even Chinese finished goods, like cars, are beginning to occupy a greater and greater space. So you cannot ignore China. You have to think about China and helping Chinese companies connect to the world. India, of course, is growing very well, and so are other parts of this region. But it'll be what we do is concentrated in the major trading centers and the major economies.
And we're hearing that Japan has been the strongest market for you. Give us a sense of what you're seeing and the plans in Japan in particular.
Yeah. So we've been in Japan also for a very long time.
But it's suddenly alive.
Yeah, well, it took 30 years. So you have to be patient sometimes. But Japan is seeing a reflation. I mean, interest rates, the stock market, Japanese companies, Japanese banks. We are a very large participant in the Tokyo Stock Exchange. And one of the things that we have invested in Asia consistently over many years is what we call our prime business, allowing people to trade equities, borrow against equities, and we provide low latency connections to all the major exchanges in Asia. It's one of our specialties. And so we do that in Tokyo and in Hong Kong, and we'll continue to invest in that.